Welcome to The Bell, a spirited conversation for thoughtful investors. I'm Adam Johnson in New York, Tom Esses in Florida.
Hey, Tom, home prices back within 7% of the all-time high. You feeling rich down there in Florida?
Hey, Adam. Yes, I actually am feeling rich. The last time I felt this rich was, late 2007.
Oh, perfect. Yeah, exactly. And that's the whole problem. We have a great show today. We've got Simon Constable, Wall Street Journal best-selling author. He is going to be joining us. But first, I want to get to our order book. The BOJ, Bank of Japan, out of bullets. You've written a lot about that. Number two, OPEC is a joke. Yes. A total joke. Yep. And finally, our hand-holding, coddling, crybaby Fed might actually have a point. So I tell you what, yes, you kick us off with the BOJ.
Sure. So last week we had BOJ and Fed decisions. Easily the biggest takeaway that is not being covered by the mainstream financial media. Last Wednesday was the day QE died. The Bank of Japan opened up a QE range. That means they will eventually taper it. For global markets that have spent the last 6 years being supported by global QE, this is a potentially really big deal. It's not a big deal for next week or potentially next month, but as we look into 2017, this definitely puts some doubt into whether or not stocks can continue to rally. It's a big deal what happened last Wednesday.
Yes, and it's also happening as our own Fed starts to taper. I want to talk about OPEC as a total joke because just as the BOJ is trying to get their act together, OPEC is trying to do the same, and it's not going to work. Like, again. And you just look at all of the OPEC meetings that have happened over the past 10 years, zilch. These guys desperately need cash. They have all overextended their budgets. They're spending money they don't have. Kind of sounds familiar, doesn't it? Yeah. And at this point, they're going to keep pumping. Meanwhile, U.S. shale producers have figured out how to stay profitable with oil under $50, and nat gas has quietly moved up to $3. So we're pumping, they're pumping. There's no agreement out there.
No, there isn't. And you know where there isn't agreement also? It's on what the Fed should do next. Now, I know everybody thinks that they're going to hike in December, but here's a little problem with that.
What?
Since August, economic data has been consistently disappointing. Now, it's not outright bad yet. I'm not saying that. But the bottom line is we should be seeing some sort of an acceleration of economic data into a Fed rate hike. Instead, we're seeing a little bit of a marginal decline. Adam, the data needs to get better between now and December. Otherwise, the Fed won't hike rates most likely, and that is not going to be good for stocks if we see an economic slowdown.
Well, at this point, what you're really saying is damned if they do, damned if they don't. If Absolutely. They don't hike, we have a growth problem. If they do hike, they've taken the punch bowl away at the same time the Japanese are doing the same. So it's quite a tonic.
Quite a pickle.
Indeed. All right. Simon Constable joining us today. He is the Wall Street best-selling author of The Guide to 50 Economic Indicators That Really Matter. And they do. They're the ones you've probably never heard of, but you should. Simon, thanks for being with us today.
Thanks for having me, Adam.
So an Englishman in New York, I got to ask you right off the bat, what's worse, Brexit or the absurdity of the U.S. political process?
America wins on this one. It's more absurd. It's much more absurd.
I mean, seriously.
That's the short answer. Two candidates that nobody really likes. That's a winner. Brexit's just the combined frustrations of decades and decades and decades of frustration with continental Europe.
Can we White House exit? Is that a word? If they can Brexit, we can White House exit. We're Obama exiting.
I don't think you can. Yes, he's exiting, which is probably wise on his part. I don't think you can. That's the system you have. And in Britain, we don't have a written constitution. It's not written down. We have a constitution. You made the mistake of writing everything down. You can't change this. Yeah. That's the way it is.
You, by the way, have some sort of presidential stock predictor. What is this? How does it work?
You look at the S&P 500 between July 31st and October 31st in the year of the election. And if it goes up, then the incumbents party wins. In this case, that would be Hillary. If it goes down, then the challengers party wins. In this case, that would be Trump. Right now, it's a little bit down.
I guess that's right, from July 31st. But we still have about another 5 or 6 weeks to go before that indicator tells us. Tom, as you look at the world, what do you, what's your take on this?
Well, I mean, I just learned something. I just learned that I can expect Hillary Clinton to be buying S&P 500 futures on, October 30th there to try and push him over the mark so she can win the White House. But it's interesting to hear a foreign opinion on our politics, because for us looking at it, it is theater of the absurd, and it just confirms sort of the sorry state of things. I think everybody was looking at that debate on Monday night saying, how exactly did we get these two on the stage?
I'll tell you what I also find fascinating, and Simon, jump in here, how markets have effectively assigned the Mexican peso as the de facto, indicator. If Trump is getting elected, Mexican peso goes down because he's going to get harsh. I mean, it's
absolutely. Well, trade is very important. The issue with trade is that, yes, in general, more trade is good, and that's what we're hearing from Hillary Clinton and a lot of economists. And in fact, even his advisors, even Trump's advisors, say trade is really good. And it is. The problem is that it displaces people, and the government, which institutes these trade deals, hasn't done a very good job of getting people retrained.
Yep,
so
exactly.
You lose your job, and it's getting retraining that needs to happen. Now, I'm not a big fan of the government doing much, but if it's going to cut a trade deal, it ought to then say, hey, dude, Adam, you're out of a job. I'm sorry, but here's some money. Go be a nurse or something. You can't be a factory worker anymore. So do something. And we haven't had that. And it's been terrible.
That is great insight right there. That is spot on. Simon, I wish you were on the debate stage last night and you could have, or on Monday night, and you could have told everybody what the real problem is, because that is spot on.
I do like trade, but I don't like seeing people displaced, and we have to help people when they get displaced.
Do you believe the jobs numbers, Simon? The fact that according to Department of Labor data, we're at 4.8% or 4.9% unemployment?
The 4.8, 4.9% number, as you know, is really an odd number, because it depends on people saying, oh, I'm actively looking for work. And if you're not actively looking for work, then you don't count in the number. And there's a lot of people who are very discouraged. There are people like me who are freelance, people like you who have got their own businesses, and it really doesn't take a lot of that into account, and the swings and arrows of that sort of thing. So it's a measure, but does it reflect 4.8, a decade ago? No, not at all.
Yeah, well, especially when you got that U6 unemployment rate so much higher. In other words, people who would like a full-time job but can't get one, they've stopped looking, they've given up, et cetera. And our labor force participation is still at 40-plus year lows.
Yep.
Yeah, that's upsetting. By the way, Tom, down in Florida, are you aware of just – and it's unfair for me to sort of say, it's retirement central, but I'm sorry, it kind of is.
It kind of is, yeah.
Yeah. I mean, are you seeing retirees working in grocery stores and bagging stuff, the jobs that ordinarily young kids would do just because they've got no income from low rates and et cetera?
It's funny. Oddly, just the opposite. So Florida's a neat place to be from an economic standpoint, because we're sort of a state of disposable income, if you will. So changes in the economy can tend to be observed here first. There, you cannot hire enough people where I am right now. Every single place has a help wanted sign. And I'm not exaggerating. I mean, virtually every single business has a help wanted sign right now. Their problem is they can't find enough people. Now, I don't think any of these jobs are particularly high paying, which is going to go into our whole point about, look, there is an underemployed segment of the economy and people aren't getting higher wages. But actually, you'd be shocked how much demand there is for employees down there. So if anybody listening today needs a job, come on down to Jupiter, Florida. There's plenty of availability.
Well, meanwhile, Simon, looking at your 50 indicators that really matter, what are the 2 or 3 that you're focused on right now that tell you there is something happening at the low end of the employment demand spectrum?
Well, I was going to look at the durable goods sector, which is refrigerators and cookers and things like that, things people buy that are relatively high ticket items if you're on a modest income, and that has been doing very badly on a year-over-year basis. You look at that, and that's, people don't need to buy a new washing machine every year, and they'll only do so when they know they can pay for it. And that tells us a lot about how people are feeling in the economy. Those are really important items. It also includes capital goods by businesses, and they won't buy them unless they know there's a demand there. So it's a problem. That I would say is the big sort of canary in the coal mine that I look at and I'm like, that's not good.
Yeah, exactly. That's real America. Talk about real America. There's a lot of stupidity out there, and I throw myself into that category. You, Simon, say, don't be dumb. It's bad for your investments. I do so many dumb things. Please elaborate.
What I mean by this is that with all the information we have available on the internet and in libraries and things, there's a real easy way to sort of get knowledgeable about the things you need to be knowledgeable about. And while you might be out for drinks with some people sometimes and they're saying, oh, I don't know anything about that, and they don't want to know. Well, that's fine for your day-to-day life, but when it comes to your investing, you have a choice. Get educated.
Yep.
And then do it again and get more educated and more educated and more educated. Because if you don't, you might as well just burn your money up in a big pile. It's a choice. Don't choose to be dumb. It's really stupid. I know that sounds like tautology, but you know what I mean.
That sounds like
be educated for free.
Wait, that sounds like a Trump campaign slogan right there. Don't choose to be dumb. It's really stupid. I could see him coming out with that as an ad or something.
Look, okay, guys. Okay, we're gonna make investing great again. Okay, that's what we're gonna do. Okay,
it's gonna be the greatest. It's going to be the greatest investing. No, the truth is you don't have to have a lot of pricey education to become a good investor. What you need is a lot of education, and that can be done for free in a lot of ways. You can read newspapers in the library. You can go and read books, and then you can play the markets on paper, which is a great way to lose no money, and you can learn about it, and then put a little bit in and learn all those other things. You both know this, but a lot of people don't. They think somehow that making money in the market is just luck. Luck helps, but it's not the whole thing.
Okay, time for the 3 L's. What have we learned? What are we looking forward to? And what do we love? I will go first. Puts are my write-in candidate this election. Anytime we get markets up 150 to 200 points, I buy puts. And guess what? Given the volatility right now, and every time Trump seems to do better, markets get scared and trade back down, I sell them, put a little money in the pocket. Puts my write-in candidate. That's what I've learned. Here's what I'm looking forward to. Clawbacks have become the new you're fired, right? It used to be if you screwed up, you lost your job. Now look at what's happening over at Wells Fargo, where it looks like there is a lawsuit now by all the employees who got fired. And some of the executives are saying, well, we may claw back some of the pay. So what am I looking forward to? Some sort of rationalization where we have a better sense for corporate responsibility. I don't care if it's a clawback or you're fired or don't do it or people actually have to serve some time, but just, give me some ground rules that I can understand, please. And what do we love? Kansas City Southern, ticker KSU. Turns out that Kansas City Southern is down about 15 percentage points over the past, call it 6 weeks, as Trump rose 4 percentage points. Remember, 48% of Kansas City Southern revenues are linked to Mexico. So if Trump gets in, less trade with Mexico, lower earnings for Kansas City. That's my new indicator. I absolutely love that. What about you, Simon?
What I've learned this whole last year is that we're going to have a candidate win who nobody likes. That will happen. That is a guarantee. So economically, it won't be good in either case because we blow up the trade deals with Trump. It won't be good. And if Hillary gets into office, I don't think it'll be very good because I think it'll be too much regulation. What am I looking forward to? I'm looking forward to sense prevailing, but that might be another 4 years. And what do I love? Well, because of all that, I'm thinking precious metals might be a good thing to love. Just a little pinch or two here because I think things could get pretty ugly.
And I think I'm up. And what did I learn? I learned that I'm going to be paying more attention than normal to the close on October 29th based on Simon's presidential stock predictor because I love trying to figure out who's going to win these elections. I love trying to find any sort of predictor or edge. I look at all the gambling sites and all that sort of stuff. But I learned I got to pay an extra close attention to the close on October 29th. What am I looking forward forward to? I am looking forward to Saturday. I have a 4-year-old boy, and we are putting up Halloween decorations on Saturday.
Oh, cool.
He is extremely excited about that, and I am excited for him, and we're going to have a good time doing that. And then what do I love? Adam, you mentioned it earlier. I am starting to love natural gas. Everybody is obsessed with oil, with everything going on with OPEC, but natural gas trends very well, and it has recently broken out of a multi-year downtrend.
Simon Constable, thanks for joining us. Where can people buy your book?
Amazon, I think, would be a very good place to buy my book. You can get it on Kindle. You can also get it in paperback.
Hey, Tom, your website?
Sevensreport.com, SEVNS report.com. Everything you need to know about the markets by 7 a.m. each morning in 7 minutes or less.
And I, of course, am Adam Johnson of Bullseye Brief. You can go to bullseyebrief.com. The 3 ideas most worthy of your time every 2 weeks. I love what I do, and I hope you will come join me. So go to the site and sign up for my trial. Guys, I think that wraps it up. This has been fun.
Absolutely. Simon, thank you very much for joining us. This was a pleasure.
Thank you for having me.